What kind of business entity are you starting? I don't mean what market. I mean, what's your legal entity? You'd better know before an investor asks. No AI will tell you this because no AI has tried to get a startup company formed and funded. I'm Tony Materna, 32 years pitching investors. Here's a pitch deck pro tip. There are exactly 3 types of business entities. 1, a sole proprietorship. 2, a partnership. Or 3, a regular corporation, or a variation called a limited liability corporation, or LLC for short. Before you incorporate, you're one of the first 2. By yourself, you're a sole proprietorship. Easiest setup, you call every shot. Got co-founders with equity? You're an informal partnership by default. That's fine short term, but any one partner can commit the whole group or create liabilities for everyone. Get incorporated as soon as you can. Here's another pro tip. Should you start as a C Corp or an S Corp? Depends on revenue. If you're going to spend 6+ months burning investor money before revenue, start as an S Corp. Your investors can deduct their share of losses against their investment for taxes. Once revenue starts, switch to a C Corp. It's free, just a letter to the IRS. Don't make that timely switch, and your investors might owe personal tax on money that the company keeps for growth. They won't like that. Here's another pro tip. If you're raising capital from angels or VCs, be a regular S or C Corp. Don't pick an LLC. Some people will tell you LLCs are flexible. They are. But that flexibility means an investor can't know what they're walking into without detailed due diligence on your bylaws, and they may not like what they find. Everyone already knows how an S or C Corp works. That's one less barrier between you and a green light. No AI will tell you this because no AI has ever had to think about its investors' tax bill. For more pro tips like this, see me at pitchdeckteardown.com.